Yeah! All right, good morning. All right, let's get going. Welcome to Forex.Today, the YouTube community of 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hello, my name is Wayne. I salute you. Yeah, hey, we got a big week. PPI, CPI. PPI tomorrow, CPI Wednesday. Huge. If you watch the video that I uploaded to QuantBox YouTube website, you'll see, why I think it's going to be huge and how even something as small as a 0.1 change in CPI could be massive. So the good news is we can be here together as a community and support each other. You can ask questions, you can get involved, and I will serve. Because I appreciate you. All right. So, how about resources? It's resource time. Do you want to learn how to trade? There's a great educational opportunity for you. Do you want to learn how to do macroeconomics? You want to learn how to do day trading? You want to learn how to do swing trading? You want to learn about monetary policy? For example, would you like to learn how to manage the balance sheet of a commercial bank? If you can't do that, then how could you possibly understand what central bankers do? Well, that's $88 total for all of that. You should join Investor Bootcamp. Then you should learn how to do fundamentals. So you go to QuantBox and you get good tools. So you can look at the market like this. You want your hit list? Your watch list? Yeah. You want to see how things are moving and shaking? Yeah. QuantBox. That costs a little bit of money. Not too much. Do you want help doing technical analysis on 7,500 charts in real time? Or do you prefer to do it manually? Would you like AI to do it perfectly all the time, every time? That's what TRADARS does. It never sleeps and it never makes mistakes. You're like, well, Wayne, what does it look like? Let me just show you. So you're like, I wonder what I'm going to do today. I think I'll waste 5 hours staring at my charts. Euro dollar 41 minutes ago, long. Okay? 41 minutes ago, USD Mexican peso, short. Look how different the analysis is, huh? An hour ago, Kiwi dollar long. An hour ago, Euro Swissy long. An hour ago, 4-hour chart. Pound Swissy. Triangle breakout. I mean, dude, you waste 5 hours a day just slowly going through your charts. The thing is, by the time you find one good thing, you've forgotten all the stuff you did 3 hours ago. It's time to up your game, son. You need to expand your game. You need to trade like you're an institutional investor. Okay. Great Britain. Jobs report tomorrow at 2. German Zoo tomorrow at 5. PPI tomorrow at 8:30. Wednesday, retail sales. Okay, this is all the volatility expected this week. Now you can look at a calendar. Just so you know, I've improved the calendar. Okay, I've improved the calendar for you. Isn't that nice? You're like, what do you mean you've improved it? Okay, well, we could go to that unemployment rate. And now when you click on it, it gives you nice little charts. Previous, expected, all that kind of stuff. It's pretty, right? Yeah. But remember, Sonars tells you of all this information, it tells you which ones are important. And let me show you how to do this. Just a little quickie. Okay, so you want to trade that tomorrow at 2 o'clock in the morning? I might not be there. So let's do PPI. I might do that one. Cool. Okay. And let's pick one of these things. Let's say PPI is greater than expected. Let's look for a scalp. Is there a scalp? No scalp. Ah, look at that. There's no scalps no matter what happens. Hey, that's good to know. There's only day trades and swing trades. That's good to know, isn't it? But what I wanted to do is let's just pick euro dollar. There's either way, look at that. That's interesting. Either way, there's only a day trade or scalpish kind of thing. Interesting. So anyways, this is what I want to show you. Let me just skip to it. You can do it like this, I suppose. So down, right? Copy. Okay, back out, and PPI. Put it on your calendars. United States PPI month over month, tomorrow at 8:30 a.m. How nice is that? What do you think? Okay, do you want a reminder? Okay, an email 10 minutes before it comes out, a notification 10 minutes comes out. I'm going to add and say, maybe, right? Maybe before I go to bed, I should get a reminder. So at 8:30 at night, send me an email reminding me what's on the calendar tomorrow morning. What do you think of that? Does everything automatically. Hit save. There it is. What a beautiful calendar, huh? What a beautiful app. Cool. So you're going to need an ECM. Barry says, sorry, man, I can't read your whole question because the stupid YouTube puts a little heart right on the most recent message so that someone else can give you a little heart emoji or a little confetti emoji, but I can't read your question. Can you drop the link for TRADARS radar trades? You just go to tradars.co and, okay, let me show you. Go to the home page and click Get Started. Right here, TRADARS Plus. The daily email, emerging pattern radars, news pattern sonars, active pattern trades, pattern backtester tool, and then you should upgrade to this as well. So that's where you get that. Yeah, that's right. Or this link to get to that particular page. See, what I'm saying is the trader alerts option, you should also consider that. So when you click here, oh, it's because I'm logged in. Log out. There. So optional, there's a real-time trade alert available, and here it is. Supercharge your trading. Get notified by email immediately. Yeah. Okay, so you add that. For $1, less than $1 a day. Yeah, big money, son. No whammies. But what I was getting to is, you know, many brokers are designed to B-book you. That's just, in fact, I had a long conversation today about the B-booking process, and it's absolutely, totally normal. It's a real thing. That most brokers are set up for you to fail, and for them to make money, they need you to fail. So they're not going to like that you have really good tools like this kind of thought process. They won't like this. So they may want to get rid of you at some point if you use these tools properly. So really, if you're going to have a small business, and that's how I look at trading, if you're going to have a small business, you need service providers that look out for your best interest. Okay? Simple enough. Traders Way doesn't have a B-booking model. They have an ECN model, and that's what you want to look for. It's an old acronym, electronic something network. It just means that they actually execute your trades to a pool of liquidity providers like JP Morgan, Goldman Sachs, you know, the interbanking system. They actually are connected to the interbanking system. That's what you want to look for. That's your key. You want an ECN. Electronic clearing network would be that way, which means so electronically, right? And so remember, these are old. It's not a Traders Way acronym. This is goes back a long time in the brokerage world. So this idea that you're electronically connected to a pool of liquidity providers. Okay. If you don't have an ECN, your trader, your brokerage firm laughs every time you lose money. So anyways, so you need an ECN. And I recommend Traders Way. It's not the only ECN in the world, but you probably have a broker that, you know, doesn't have a symbiotic relationship with you. It doesn't make any sense. So, yeah. What do you want to do? So PPI tomorrow. Yeah, tomorrow PPI. Market's going to be hypersensitive to that. Dollar falling right now, that's risk on. Let's start with the global stock market. Are you okay with that? Mr. Piglet! What's going on, buddy? How's the fishing? Omar! Omar's in, everybody. Okay, all right. So here we are. High, what do you stink? Now you can see the acceleration of this trend that we've been on for quite some time. I think I bought it. This is my second one. I bought it in January. And I got kicked out, and I bought it again in January or early February. And we're still in. Missy. MSY Foundation. Okay. So an acceleration pointing towards risk on. Maybe a China recovery, maybe a Chinese stimulus. Yeah. A big pullback here to the bottom of our channel, which was 2 standard deviations from the mean. And then went back to standard deviations above and then just blew the doors off of this. And I do believe this had something to do with low in the United States, which will be setting the risk on, risk off mode. This had to do with a low GDP, low NFP, low ISM manufacturing, and low ISM services. Simon. Yeah. I am Simon, if you please. Anyway, so buy a little dip. Going back to the FTSE, you can see we're at a top, and there was definitely a risk of this happening, and then we blew the doors off that. The pattern is M2 up into this. I closed my drawing to the last meeting. Hang on. Can I look at Bitcoin? No, that's impossible, Burn. I would never, I tell you never. So the pattern here is this predicts up to about here. AB says, hi there, Mr. W. Risk on and risk off is your market sentiment, right? Yes. Yeah, Bert, yeah. Very disappointing. Yeah, we'll get there, buddy. Yeah, Quant Box hates it. Yeah. So anyway, so we're up, but that now in the future could allow us maybe buy a dip in here. Hang on. I'm trying to get this. It's fighting me. Stop it! Okay. Maybe like that. Okay. And you're like, Wayne, I still don't understand what you're saying. All right. Hang on. Let me draw it in English. Okay. And let me sort of put an exclamation point on this, just with my, okay, like, is it a big deal that we made a higher high? Uh-huh. Yeah, afraid so. So it did not kick off, and then boom. And just like the intervention in Japan, you know, it was all the stop orders. These are all stop orders getting triggered. Oh, okay. Well, maybe it's going ape crazy. Hey, Jim. So, yeah, the developers did an audit, and I'm not satisfied at all with the audit, so I have to audit their audit. Well, I think they're still there. Okay. How's Australia doing? Okay, once again, there was a breach of a down channel. What are you supposed to do? Okay, buy higher lows. These remind me of Pegler pitchforks. Maybe I'll do a Pegler pitchfork for you. Sometimes I'll take the original low of the bottom. Okay. And you could also go to the oldest low slow. Now, none of this I think Pegler does, but I play around with it. That's one reason I didn't use these, is I found that I ended up playing with them a little bit. But I'll usually adjust as it makes higher lows and higher highs. Anyways. So there's just a brief overview of global stock markets. Okay. And I'd like to thank you for clicking the thumbs up button to tell YouTube that you're alive. Thank you for clicking thumbs up. I appreciate that. Now let's look at the U.S. stock markets. They're opening soon. And we're Oscar Mike, kicking off the 1 hour 21. It's a hot trade, which means we're out of position. Okay. If you're not sure what out of position means, you need to go to investorbootcamp.com. Pay the $88. It's not going to be a waste of money. Yeah. I mean, I just paid $500 for a training course. So, $88 a year is stupid cheap. So anyways, take it just so you know these things. So at least we can communicate in the same language. Okay. Yeah, well, Richard, I don't even know what that means. By whom and how did they come to it? So I don't like it, Richard, when people say, oh, CPI is forecasted to come down. I only care about what you think in the rationale. Yeah, that's all I care about. Yeah. All right. Nazi. But you know that, Richard. You know that. Yeah, but you're bringing someone else's opinion. So you're saying like, Richard says, other people think blah, 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 blah. It's third party. Like, I don't care. Right? So I care about you, Richard. So I'd rather you say, well, you have analyzed the trend in CPI. You've analyzed the trend in PPI. You looked at ISM service subcomponents. Service and manufacturing subcomponents have shown that inflation pressures have receded. Great. Love it. Okay? Like, I know this stuff. So I have an opinion. And what I'm trying to get across, Richard, is I don't know what other people think. And I'm not trying to be arrogant. It could come across as arrogant. But I've done the research. I know what I think. I don't really care what other people think. Now, I can see in the market the way people are positioning themselves. And I can anticipate the reaction if it's greater than expected or less than expected. That kind of stuff, you know. But what some analysts think, dude, right? Like, I don't care what an analyst thinks. Have you watched a Fed meeting lately? If you're 20, you're the oldest person in the room. Right? So whatever, bro. Right? Like, so I'm making a point. I'm not beating you up, but I'm making a point where the data's out there, and I don't like it when somebody says Bloomberg analysts say up, down, sideways. Whatever. You know, whatever. I don't. So it's easy to get the CPI trend. It's easy to look at, like, why don't we just do it? Like, right, let's just do this. ISM. I do this all the time, by the way, all the time. Just join the swing trading group. It's a lousy $99 a month. Like, dude, right? Like, everyone should be a part of it. I'm on, where's the report? Sorry, I clicked the wrong link. It's probably here. No, there we go. All right, let me just show you. So instead of saying you heard some idiot on TV, I want you to do something like this. You go to the report, okay? And we scroll through here. And you look at, well, a lot of these things. Prices, for example. Prices are up 5%. They're increasing and they're faster. And it's been happening for 4 months. Oh, wait, has inflation been up for 3 months in a row? CPI has been up for 3 months in a row? I wonder if it's related to this. We went from 55.6 in March to 61, increasing faster for 4 months. And you have the gall, Richard, to bring in this negative 0.1 CPI projection from some person that didn't even read this. So, like, I don't care what they think. Right? How they, you know, and what you do, here's the funny thing, Richard, like when you try to reverse engineer a lot of the expected news, right? Very often what you find is they're just telling you the 3-month average or the 6-month average or the 12-month average. You're like, dude, that's it. So, like, if you think about it, if they're just doing an average, but you're in a period of high inflation, then they're always going to be low because that's what average means. And then in a period of disinflation, falling inflation, and they're telling you the average, it'll always be high. Like, if you go with the average, you'll always be wrong. And you got to be careful because very often that's all they're doing. They're like, and they don't even know they're doing it. It's just in a model. And the model says, well, take the difference between the 12-year average and the 3-month average, the 12-month average, 3-month average, and then do an average of the differential of the two averages, and you get all these convoluted models. But you're like, well, did you just look at the manufacturing industry and it's in contraction, 49.2, because prices are exponentially increasing. They're spiraling out of control. See, I'd rather you bring that to the table. Right? Or now we look at the service sector, also in contraction, which, I know all this stuff because I review it all the time. But now we can go and say, well, how's the service sector doing? Oh, it's also increasing from a 53.4, which is high, to a 59.2, which is extraordinary. They're increasing, they're faster, and it's been going on for 83 months. Shut the back door. Not only do we have the service sector and the manufacturing sector, not only do they both have inflation, they're crazy high inflation and accelerating. So tell me again. I'm having so much fun, Richard. Thanks for going along with it. Tell me again, Richard. Where's the decrease in inflation, right? Like, dude, boss mode, right? Can you see me publicly shaming and humiliating the 22-year-old that came out with the forecast of, I think it's going to be low. Total destruction, right? Total devastation. Well, I'm not trying to have anyone here be arrogant, or I'm not trying to come across as arrogant. I don't know what the number's going to be because at some point this is a survey done by the government. And if the government doesn't like it, they just change the math. But here's the bottom line. I want people to quote you about the future expectation of our market. Let me say this again, everybody. I want you to be the boss. I want people to quote you about the future expectation for the market, because you're the one that does the work. You're the one that knows the information, and you're the one that can stand for something because you know what you stand for. And this helps in two ways. One, when you are right, you're going to have the confidence to trade. And when you're wrong, you're going to have the confidence to get out. But if you don't know what's going on because you don't do the work, you're a peon. You add no value to the market. The market doesn't give a crap about you. You don't add any value. You're just sort of in the way. You're adding liquidity. Oh, thank you for the liquidity. When I need to get out of a long, you'll buy it from me. But you don't do the work, so you don't realize you bought it at a pivot profit zone, and I'm getting out and I'm giving you you're buying my dead horse. Right? So that's why I'm like, I don't want you to be that kind of trader. I want you to be solid on technicals. I want you to be solid on fundamentals. I want you to have the solid psychology behind what we do. And you are boss. And people quote you. Did you hear what Richard said? He quoted a guy that quoted a guy that quoted a guy. Yeah, no. Richard said, based on his analysis, inflation's coming down. I'm like, cool. I don't know how you got there, but let's talk about it. And Richard might come in and say, oh, he's looking at something completely different. I'm like, oh, that's really interesting, but did you notice this? And then I pull up a subcomponent of ISM on both sides of the economy. And he's like, yeah, I could see that, but, and we have a talk, we have a debate, and then we position ourselves in the market. And maybe I'm right on the long term, but he's right on the short term. We both make money. We both put, premium gas in our Lambos. And he's short-term short and I'm long-term long, and we're laughing all the way home every day. So your customer says, I did read the same. See, that's where you go wrong. You should come to my meetings on Tuesdays, and that's where you get your information. So we'll look at it. So yes, I understand. And no, it's not. So the markets are moving. Yes. They are moving risk on. Yes. Is it because people expect lower inflation? That isn't necessarily true. Now, I can't tell you what people are guessing on and betting on, but let me tell you what is happening. By the way, am I teaching you how to communicate confidently? Do I sound confident? Even if I just spew a bunch of doggy doo-doo, at least I sound confident. It's going to be helpful one day. Okay? The market is going up because we have lower than expected GDP, lower than expected NFP, lower than expected ISM services, lower than expected ISM manufacturing. So then to say the market's going up because inflation is expected to come down, that's too much of a leap of faith for me. That's degenerate gambling. I don't know what CPI is. And you could argue because of these contractions, prices are low. Yeah, but no. You understand, like, that can lag a lot. So I am not going to make the leap of faith. Now, I do want CPI to come down. I will make a lot of money if CPI does come down. I'm positioned in the market. My concern is those people are wrong because they don't understand economics, because they're journalist majors. Now, let me make this point. I've been to the Bloomberg studios more than once. And I've done multiple times Forex specials with producers at Bloomberg. So I've been at the Bloomberg studios, 10 o'clock at night, just hanging out with people in the empty office. Just hanging out in Bloomberg, talking economics and markets with people. Pretty cool, right? Like, yeah, no, seriously. It was cool. But I can see on the desk of the producer 6 books stacked up about what is Forex. Forex 101. Forex for dummies. They're journalists. They're researchers. But they're not traders and investors. Okay? So when they say, oh, well, GDP is down, obviously CPI is going to be low. That is not necessarily true. Okay? If it comes out true, I'm set to benefit. I'm okay. Trust me, I'll make a lot of money. Sweet. But, and that is a big but, if they're wrong, and remember, I see the reality, I think there's a pretty high chance they're wrong. I also know what to do, and I know to do it quickly because I'm prepared. Because some basic research, remember, a journalist major may not know how to do this type of research. They don't know how to do the economics. They're not good with math. They're not good with money. This is why they're journalist majors. So, if the market or if the number comes out higher, and I covered it today, if you want to know the answer, I'll give it to you because I want to move on here because I've already covered this. This is already done. Like it's 9:30 and you don't know this? Like where were you at 6:30 this morning? How come you're not a member of QuantBox? Like what? Oh, it's $79 a month. Really? That's... I mean, come on, guys. You need to get big. Okay? Stop going to Starbucks. Join QuantBox. Time to get professional. Let's go. So again, I tackled this in great detail 3 hours ago. This is old, right? Let's go. Right? Let's go. So that'll be released in 41 minutes. But let's just say the market's going to move dramatically if it comes out high or low. But I know where I stand, and if I'm wrong, I'm okay with that. I said I don't know what the number is. And if I'm wrong, I'm going to make a lot of money, so I don't mind being wrong. I'm like, oh, damn, CPI finally came down. Sweet, guess we're going to add a cut. Great. But if it comes out different, oh my God, I need to act. And I already know what that's going to be. Okay? But never, ever, ever let a journalist major become your boss. Oh, well, she said CPI is going to be low because GDP was low. Oh my God, be careful. You guys want to do commodities like gold, oil, and Bitcoin? What's your favorite commodity? What do you want? Gold, silver, Bitcoin, oil? What do you want to do? Let me know in the chat. You got about 20 seconds. $15, $14, $13, $12, $11, $10, $9, $8, $7, $6, $5, $4, $4, $4, $4, $3, $3, $3, $3, $2, $2, $2, $2, $1, $1, $1. Oh, we can do some crypto if you guys want to go into that. We'll treat oil. Sorry, we'll treat crypto separately. Okay. Cool. So oil, I'm a bull, and I'm a bull from right here. La 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 la. La 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 la. So I'm long and strong at 77.5, and we are Oscar Mike, bro. Oh my God. Oh my God. Yeah. Up and up and away. Huh? Love it. So this has all been trended up. Good, good, good. Good, good, good. Maybe we can get above 80 again. We struggled with 80 last time. We're right. So you're late. So again, if I trade oil, okay, I trade it sort of in this period. It's in investorbootcamp.com. I have an entire oil trading course. If you don't know the difference between a heater treater and a vertical separator, then I'm disappointed with you. Yeah. You should know. Hey, hey, David Pegler. Do you still have that buddy at one of the big oil firms on the trading desk? You still communicate with that guy? You had a buddy. It'd be interesting to talk with him if he's still there. Maybe like a podcast, right? I have a podcast that I haven't launched, but I built it. Be interesting. Retail versus, institutional versus corporate trading. Love to talk to a guy on the trading desk of an oil company, right? Be super, super cool. And then like little things like most people don't know, like what most people know is there's oil. And then the next level is, wait, there's Brent and there's WTI. But Saudi Arabia produces like 25 different types of oil. Most people are like, wait, what? There's 25 different types of oil? Yeah, and it has to be traded. And when you know stuff like that and you hear Saudi Arabia raise prices, you find out that it's symbolic and it's more of a press release than reality because they raise prices on oil that nobody wants. So who cares? Yeah. Oh, yeah. Gas. Yeah. Dude, there's some people killing it in the gas business, huh? Yeah, I need to go to Norway anyways. I'm going to go golfing. So maybe I'll stop. I'll go golfing in Norway and stop, interview this guy, do a podcast, and write everything off my taxes. Yeah, interesting. Cool. Sounds like a road trip. I'll pick you up on the way, David. I'll swing by your house on the way to Norway. Yeah. I'll meet you in Meter. I'll meet you in Metter. Pick up my free Coke. All right. So anyways, oil Oscar Mike. I'm a bull. You know that. Okay. Favor says, what is the logic behind me being a bull? Well, there's two things. Seasonality. And the second thing is risk premium because of the geopolitics. So I'm buying risk premium. So for example, and then third, there's technical. Okay, like let's just go out here. Okay, I let it fall for 6 weeks or something. The whole time I was a bull, but I don't buy falling markets. I don't buy falling knives, right? All right. So, what happens here? Okay? This is a counter trend. I know that. Done. I want to be a bull anyway, so that's where all the bears exit. So, I'm out on that. Okay? I'm out on a bearish exit. I waited for 6 weeks. It wasn't complicated at all. That's what the chart says. Okay? You have to be clear on what your chart says. And so now I have a double bottom. And this is likely in the future, let's say. I don't know what the future will be, but let's say that's what it is. And seasonally, that makes a lot of sense. I can be long until about July. Okay, let's add a third one. Let's say tomorrow, Israel attacks Rafah. Okay, we're up here. And I just crushed it. Just freaking crushed it. Oh, well, good for me. But, okay, what an amateur does is they see this big spike, and I made a lot of money very quickly, and they say, good, smart, brilliant. No. What's good, smart, and brilliant is no longer being a bull here, but price-wise. Like you're no longer an owner. And you wait and you wait and you wait day after day after day, week after week after week. And then you become bullish here. And you rebuild here. And you're able to wait. Okay, that's boss mode. Okay? Remember last week when I said, you know, the strength and endurance it takes to be a sniper where you lay on your stomach for 4 days? You're not allowed to sit. You're not allowed to stand. You're not allowed to, right? Do anything. Hey, boss, I need to go pee. No. Okay? You wait and you wait and you observe and you observe and you observe and you observe, and now you have permission. Okay? Now. So it's that. It's that. So if this just pops on a geopolitical move like this move is not brilliant. It's not. This move, the being out of the market and waiting, is what's brilliant. And it's tough. And it's hard. And amateurs can't do it. Because they need to trade every day or they need to get rich today. And I think the game is setting up ambushes and being ready. That's where I think the tough is. Okay? Are you disciplined enough to wait? Are you strong enough to be kind? Okay? Oh, I forgot to mention, David, we're taking your kayak. Do you have one of those little sails? Yeah. It's going to get choppy in the North Sea. Anyways, so look, guys. Okay. Knowing where you stand is the most important thing as a trader. The second thing is being able to be strong enough to wait and set up your trades in advance. And third, look, if you know technical analysis, then that's got to be by far the easiest part of trading. Okay, you know that's a bearish exit. You know that's a double bottom. If you're already a bull, what's the issue? If you were a bull last week, if you were a bull the week before, if you were a bull the week before, like if you were a bull the week before that, this was plausibly an entry long. And you might have made some money or you might have broke out break even. There's no problem. There's no issue. Okay? There's no issue. Seasonality hasn't changed. Okay? So, boom. Now, if you're a bear, ladies and germs, if you shorted here, okay, if you shorted here and you didn't exit here, then you don't know what you're doing. Plain and simple. And it popped. Well, I know you're going to get out. If you know what you're doing, I know you're going to get out, so I have a chance as a bull. Now, I took multiple trades here. I'm down to one. But now I have a double bottom at an exit zone. Do I have permission now to buy higher lows? Higher lows? Higher lows? Yeah. And then I get the risk premium if it pops. I don't know if it's going to pop. I don't know. It's just a trade. But it's easy if you know technical analysis, and it's easier if you know fundamentals on top of it. So that I can sit for weeks waiting to ambush. Cool. No problem. No problem. Silver. Silver, you just saw me enter a trade based on what? Higher high, higher low. You see? Down. Okay, why didn't I sell this? Or why did I not sell this? Harsh, watch this video. Okay, I covered it 3 hours ago. Watch the video. Subscribe while you're at it, huh? All right. Why did I not sell? Geopolitics? No. Now Barry's like, he beat me on this one. Well, it's just a higher high, higher low. Okay? There's nothing to it. I don't care about this trade. But why did I not sell? Look at that dramatic fall. How come I did not sell? Come on, guys. How come I don't get dozens of answers? Hello? Type in a question mark if you just don't know. I mean, look at the red candles. How come I didn't sell? Well, those are bearish engulfing candles. Those are hourly candles too. For some, that's great, right? An uptrend? Okay. Market is bullish. Well, I'm bullish fundamentally. Okay? The big difference between a professional investor and a retail investor. Okay? The big difference. I know I'm going to buy it before I even look at it. The second thing is, if it's falling like a ton of bricks, I step aside. But I do want to accumulate. Okay, so I've done an analysis. Now I'm fundamentally a bull because of something simple, and this is my model. I'm not saying it's even correct. It's just what I'm doing. Okay, CPI is greater than GDP. All right, that's one thing. That's fine. But you have to understand the power of me coming to this chart, already knowing that I want to buy. So now I just need to look for opportunities. And these, right? And I am not influenced by the chart. This is just the price and time in which I will buy. Okay. So I'm long down here as well. Okay, actually it's here. Higher high, higher low, buy. Cool. Higher high, higher low, buy. Now, I waited for consolidation, and then I got it here. Oh, well, I'm conservative. Will it work out? Oh, I don't know. I don't know. Okay. Okay. Yeah. Now, I could have played it a little more aggressive, right? But I was doing other work. I was doing other work on the drop. I could have bought it down here. Yeah, well, cool. But it might work out. It could be all right. So gold has collapsed to my role reversal. If I wanted to, could I accumulate? Okay, bull. Okay, bull. Is it possible we do this now? Sorry, I can't draw the stupid. There we go. Well, remember, I drew this for you, I don't know, Wednesday last week. I drew this setup exactly 1 month ago. April 13th. It's May 13th. I drew this pattern for you. And so it's like, did you buy the double bottom? No. Did you buy the higher low? No. Whatever. I don't know. I don't know what you're going to do. Okay? So here's the thing. I draw all this out. I don't know what you're going to do. Some people say, well, Wayne, I can't learn unless you pull the trigger right here now on the 5 EMA. Why? You're not going to learn. That won't. You need to practice making a decision. And you need to deal with the emotion of taking the risk. Okay? So all I know is I've analyzed this for you days ago, weeks ago, and even 1 solid month ago, that this might be an interesting price. So we only know 2 things: price and time. All right. Is this the right price? Yeah, potentially. Yeah, if I wanted to own gold, sure. That's a pretty reasonable price. I'm interested. I just haven't decided when. I'm interested at this price. So now I'm going to use technical analysis. Isn't it wonderful? Now I'm going to use technical analysis. Should I buy it now? No. Cool, done. Right? You see how easy it should be? I'm trying to teach you how to plan in advance using longer data charts. I'm trying to teach you how to plan in advance using fundamentals. Okay? Cool. Is this the right time? No. It's the right price. Well, what if it falls? I'm just waiting. If it falls, I might be interested at a lower price, but if it falls too much, I might not be interested at all. Okay, so I don't know. I don't know. If it falls too much, I might change my mind. But right now, I'll buy when I see some green on the screen. Okay, if I'm a bull, there's only one thing I do. And 60% of the time, it works every time. If I'm a bull, I buy a higher low. Is that a higher low? No. Huh. Too bad. It's the right price. It's just not the right time. You have to have solid rules of engagement. Okay? There are rules of engagement. So, those rules of engagement will keep you alive. Do you remember my book where I say, right? that I am the battle-scarred, beaten up, bruised NCO, non-commissioned officer. I'm the guy in the jungle with you that keeps you alive. One of my favorite war scenes is actually Hamburger Hill, and I saw it again just recently on Netflix or something. And it's just an officer. No, he's not even an officer. So an NCO teaching new grunts that showed up in Vietnam. At 101st Airborne, by the way. How to brush their teeth. And I think it's so beautiful, the language and the process. And, of course, one of the guys spits out his toothpaste in front of this guy. And you just know you don't do that, right? Anyway, but he's like, look, if you can't follow the rules, right, we're going to be dragging your dead body out of the jungle. And he's like, it's a waste of my time. Right? If you can't even follow the rule to brush your teeth, you're not going to charge, right, when I tell you to. Right? And there's another scene too where a guy kind of laughs at in this case, an officer making a speech, and he's like, look, I'm going to save your life, and I'm counting on you to save mine, right? There's rules, there's a process, and it's in place. And if you don't follow them, you blow up your trading account. It's that simple. If you don't follow the rules, you're vulnerable. If you follow the rules, more often than not, you're going to miss bad opportunities. May not make you rich, but you'll avoid a lot of mistakes. That's Hamburger Hill. A story of the 101st Airborne humping their way up some hill. And I think and here's the thing. I was watching this May 10th. So 3 days ago, right? And it's day one, they're assigned to go climb this hill. And guess what? And it's May 10th. Day one, May 10th, 1967 or something. I'm like, it's May 10th today. Right? Yeah. And it was just so cool. Darko says, Dakar says, there's nothing to buy. Maybe. Yeah, maybe. We got PPI, CPI sucking up. It's a risk event, right? It's a risk event. So we might be losing volume and volatility, right? All right. Let's do crypto. Who wants to do crypto? Crypto. Trying to see. I don't know. Nobody's clicked the thumbs up button, really? I'm just doing it for YouTube. Really? Half of you haven't even clicked the thumbs up button? Well, forget you then. Yeah. No, come on. Do it. Click it. I dare you. Double dare you. Click it. No, don't. Don't click it. Don't click it. Try that reverse psychology on you. All right. Crypto. Cryptomaniac. A little bit of vol. Little bit of vol. Yeah. All right. Where are we at? So, do you remember the time that we fell in love? We were young and innocent then. I drew this for you already 2 weeks ago. 1 week ago? I don't know. Right? Sorry, I sound tired. It's Monday morning. I'm already tired. It sounds like a bitch fest today. I apologize. But I gave up Mother's Day to do my technical analysis work. Very few people showed up to the day trading group Sunday evening. Now understand, family is first. I left a dinner table full of family to do my technical analysis on the market open, and very few people joined me. And I thank them for being ballers, because I know you have to make a sacrifice. And when push comes to shove, it's very interesting who shows up. Okay? So, anyways, part of that toughness is like we've already done all of this. And most people, I don't know if it's you, but most people come in and every day they're like, what about Bitcoin? What about Bitcoin? What about Bitcoin? I'm like, well, we did it 2 weeks ago. What's your question? What about it? What about what? Right? What about what? Did you buy the inverse head and shoulders? Right? Right? What scum not joining, right? But like, do you know this? No, I don't know this. Then it doesn't matter what I say at any other point, right? It becomes empty. Like you don't have this planned out. You didn't look at your chart. You didn't plan this out. You missed the inverse head and shoulders. Really? Well, then what am I supposed to say to add any value? Right? You understand? Right? Like, well, you're trading this, right? No. Well, what is it that you're trading? Random. Tell me what you think, Wayne. Why? You won't listen. I know. Sounds pissy, right? But I am trying to make a point. Like, did you set that up? I did it way in advance for you. Way in advance for you. Is that what you set up? Is that what you've been waiting for? You're like a sniper. You spent hours and days waiting for your opportunity. And it comes and goes in a split second. Okay? So, you got your higher high. What do? You buy a higher low. Where? Well, let's analyze a roll reversal. Somewhere around there. Okay? So we get our perfect entry, right? Perfect. It's so perfect. It did this, right? Well, that's what you plan on. Now, on a smaller time frame, you could have watched this on a 5-minute and 15-minute chart and see that it didn't bounce. But let's say you didn't. Let's say you used a limit order. Your stop's going to be low, probably even lower, more like that, because you're going to use Fibonacci, right? But also you're going to use the shoulder, right? That's the next part. So let's go further back, because you're waiting for a couple of things, right? This is price action, but what was the original pattern? Remember the left shoulder? That's what this is. And you knew this 2 weeks, 3 weeks in advance, right? So this is where you expect the right shoulder to be. Okay, let's try to do this in a color that's just easier to see here. Okay, you're expecting this zone. You got your higher highs, so that's game on. So you have a plan A and a plan B. Plan A would be buy it here, and plan B, sort of a bottomish zone here. off of this support. And if you do plan A, which on a small time frame, I don't think you actually got a trigger. I don't think you could find a higher high, higher low in there. But even if you did, you know you got to put your stop lower than this or lower than that, depending on your time frame and your sizing and all that. Okay, cool. But what if you didn't know this? What if you didn't know this? Oops, delete. Okay. You had no idea the importance of this price. And I'll show it to you again. I'll just back out. Oops. Okay. So let me do it again. You had no plan for that price to be support. Then you wouldn't be long. Byrne says, well, that's why I wonder why QB is bearish. Oh, this isn't fundamental, Byrne. This is technical analysis. It's an inverse head and shoulders at an obvious price zone that's important to Bitcoin. It's so obvious that my machine colored it in last month. So it's just technical analysis on top of technical analysis. It's just a trade. Doesn't make it right. Now, if you're a bear, well, you're interested in something different. So I could do something like, let's get rid of, I'll leave bias pivots, but let's get rid of these pivots. So you don't know anything about pivots. Okay. Ooh, I have a zigzag on there. Oh, zero leg. I'll leave that. Why not? Bias pivots, those are daily. Price action pivot points. Okay. Let's go back a lot. Okay. All right. So I'm a bear now. So I don't care about no stupid inverse head and shoulders. I expected it, in fact, because we were 2 standard deviations below the mean, but the slope of the mean, okay, the run, oops, pink, let's do it, right? Okay, the rise is a negative number. So I'm a bear. So I understand we're 2 standard deviations below the mean. That's a take profit zone. Great. So I was a smart ass bear and I took profit. Okay, cool. Well, somewhere in the future, if we continued at this rate, I don't know. And let me delete this because we got to get rid of this. This is now irrelevant. I guess I can kind of leave it there. Okay, it's somewhat relevant, not really. But I'll try to make it relevant the best I can. Okay. So the idea here is that if I was a bear, this sort of zone is where it starts to become overbought and maybe will become bearish again. Like what we saw in the past. Cool. So let's say it goes up for a week. What do I care? I'm a bear. Who cares? But if we start to make lower highs and we're 2 standard deviations above the mean, well, there's either a mean reversion or we're going to go to the bottom of the channel. Sweet. The difference is I've decided to be a bull or a bear. So if QuantBox says QB equals negative 10. I'm a bear. So I got an inverse head and shoulders. And you're like, whatever. What the hell do I care? It's probably going to go up here and then reverse. Sweet. So I set up ambushes. I'm moderately interested in selling here. I think it's too early in the week. So maybe here, but it's even doubtful we'll get to that point. Maybe here, maybe here. Remember, I'm very horizontal. Even though this is slopey, it just shows me technically this is bearish. Right? It is bearish. Well, I got a bullish signal on a 15-minute chart. Well, good for you, son. I'll see you up here, and I'm going to dump it. Now, I do consulting work. I get paid in Bitcoin. And so I requested to get paid here. See, now I'm using the analysis to my benefit. So I could probably do all right, and I can hang on to it for a couple of days. But suddenly if I get a right, I'll be out with cash in my pocket. Okay? So I can run my business doing analysis and say, hey bro, you owe me a Bitcoin. Send me a Bitcoin. And they're like, okay. And what about now? No, don't pay me now. What about down here? Okay, pay me here. Okay? I can delay a payment by hours, but often days, a week or two. Yeah. Okay? So like, let's say I could send out an invoice here. Does that sound good to you? No. What about here on the bottom, right? At the mean price. Yeah, I could, and it popped for a couple of days. Oh, I might pick up. Hey, look, it adds up. It's only trading. It's only investing. It's only money. Okay? That's the easiest part of trading. You know what's the most difficult? Is what I try to do every day. I'm trying to create an emotional response. So if sometimes I piss you off, it's by design. I'm a good guy. I think I'm a good person. It's hard to be a bad person when you think you're a good person. I think I'm a good person. So even if I piss you off, it is because I'm trying to provide an educational experience that you might actually remember. And for many of you YouTubers, I have about 1 minute, less than 1 minute to decide whether you like what I do. And so maybe you'll love the fact that I push people around, beat them up. Maybe you won't forget it. Maybe you'll stick around. Maybe I'll have a chance to teach you something. I don't know if you're coachable. Okay? I don't know if you have a half a brain or a quarter of a brain, or if you're genius. I don't know, but I don't have much time. But if I can create a emotional response, you'll probably grab onto the intellectual lesson, and you might actually remember it. If you can't remember it, it didn't happen. Okay? So the thing is, I'm not trying to teach you technical analysis. I'm not trying to teach you fundamentals. I have courses for that. It's not very much money. It's super cheap. But the thing is, I am teaching you to be a boss, a fully independently thinking trader and investor that has patience, discipline, and control. You can make your thoughts, translate that into strategy, and you can carry it out. If you can do that, even if I disagree with you, I think we'll both make money. And that's the important thing. I love what you do. Keep doing it. Peace on earth. May the pips be with you. May your profits be above average.